a lower dollar, right? You let the price of gold spike, what happens to the value of dollar? It falls in relation to gold. But your gold holdings go way up. Your balance sheet looks better. Your exports might do better. It kind of serves his purpose. It's doing. They're buying all of these assets, these commodities, and what is the public doing? They're buying shiny things. Gold was up 30% last year. No one notices it. It's at $3,000 knocking on the door, and nobody notices it. If you would have told me that when most of my career, when gold was 400 or less, I said there's not a damn chance in hell that ever happens. People will be banging down our door to get it. Where is everybody?
In today's news recap, South Korea's mint halts gold bar sales as supply tightens. South Korea's mint has temporarily suspended sales of gold bars, adding to signs of widespread tightness across markets for physical precious metals. The Korea Minting and Security Printing Corp said it's facing problems with sourcing supply and managing demand, and that it will try and resume sales as soon as possible, according to a notice on its website. The move comes as traders worldwide rush to deliver bullion to the U.S. ahead of potential tariffs on the metal. Prices for gold on New York's COMEX have surged above international benchmarks, resulting in unprecedented tightness and record outflows from London vaults. The precious metal has made fresh highs in 2025 as growing trepidation surrounding U.S. President Donald Trump's disruptive tariff announcements drives demand for haven assets. Investors are trying to get a read on the potential implications for the global economy, reinforcing bullion's role as a store of value in uncertain times. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Things are not as they appear to be with this guy. He's shrewd as hell. And if he really is looking out for the country, truly, and he's not the Trojan horse, as Francis Hunt said to me he was. I found it interesting. I may not completely agree with it. Maybe some of it I did, but then the first thing to do would be to stop the outflow of all of the gold and silver and the commodities eastward. And he wants a lower dollar, right? You let the price of gold spike, what happens to the value of dollar? It falls in relation to gold. But your gold holdings go way up. Your balance sheet looks better. Your exports might do better. It kind of serves his purpose. And if you were being honest with Xi Jinping and Putin, look, fellas, I don't want strife anymore, but you guys are buying all the gold. We're going to let it run. And that will benefit you. And let's find a way to coexist. You keep doing your things. You want to do your BRICS things, whatever, but let's do it in a manner that allows us to coexist. I don't know. See, I get to this point, I see all of these dots, and I see there's something bigger is happening than they're saying, way bigger. It doesn't ever go like this. And then I go blank. Like, what's next? I don't know. I don't know how it all plays out, but I'll tell you, when she says there's 50-year treasuries coming pegged to gold and stable coins off of it, and she is right there next to him, I believe it. And the only way to do that would be to get as much gold back as you can, because who knows how much of it has been leased out anyway. Get it and then revalue it. It's held in the revaluation account, and everyone's screaming revalue it. It's at 42.22 on our books, 35 on every other central bank in their revaluation account. And they're the ones that have been buying it. Wouldn't it behoove all the central banks to do that? Or what if they all knew that that was part of the script? Just like they all repatriated and front ran the purchasing in 2016, 17, and 18, and 19 before it was reclassified. What if the central banks know that this is the long game? If you look at Jan Nieuwenhuis, I think is the guy who's written about all of the accumulation of gold in the European Union as a percentage of GDP, gold to GDP on their balance sheet. And every single one has almost the exact same amount right now, like redistribution of gold. They all have the same amount. It's as if they're preparing for a gold revaluation to back a new system. What if these central bankers know the script? I mean, they are the most informed traders on the planet. It just seems like gold is the more things change, the more they stay the same, everything's coming full circle. Gold is going to be reinserted into a system that has lost all trust to reignite that trust and find a marriage of blockchain technology, just like they said at the BRICS. Project Enbridge trading the unit, 40% gold backed. 40% is what the Swiss used to have, by the way. Their currency was back 40%. 40% gold backing is the number a lot of economists say would be perfect. Well, there you go. You can just see that these things in and of themselves are significant. Put them together and it's like, man, it sure looks like something bigger is on the horizon. And what better guy to do it than Trump, who is blowing up the house. And this would be something that has to be done. First, you come in and you reunite the country under our ideals. Even some of the Democrats are blown away by the changes and the fraud and all of these things. Mm-hmm. And we're not talking about the idiots like Cory Booker who scream about Doge trying to get this government from being wasteful and borderline criminal. Get it in order. But I'm talking average people who are more left-leaning say, man, he's really doing something. And then you have Doge say, look, we've tried to do all we can, but without completely slashing Social Security and Medicare, we have to do something different. We all need to tighten our bootstraps. And here's what we're going to do. If we reset the system somehow, some way, what better guy to do it than the guy that is the master of reorganization and bankruptcy? When of the $200 trillion that we owe, only about $8 trillion is owed to the rest of the world. The majority is owed to the American people in all of the money markets loaded with treasuries, in all of the people chasing yield loaded with treasuries, in the insurance companies and the pension funds. And we're the ones that have been buying all the treasuries as they've been selling it, and Medicare and Medicaid and Social Security and all the pensions, they're all owed to us. So if you do something to reset the system, peg it to whatever you're doing, I don't know how it all plays out. That's where I go blank. But I mean, it's all owed to us. So if you're going to do it and say, look, our children will now have a world that they can look forward to growing older in, and opportunity is coming back, we have to pay the price for the indiscretions of fiscal irresponsibility and fraud, really, to the American people and to the rest of the world. It has to be paid back somehow. And revaluing gold would be a much more benign way than outright hyperinflation or outright default. And I'm telling you, I swear in my soul, I feel this is where we're going.
In today's news recap, gold's rally stalls as silver price hits a brick wall. What's next for precious metals? Gold's run to consecutive record highs appears to be stalling as the precious metal ends the week back below $2,900 an ounce on strong profit taking. While gold attracts the most attention in the marketplace, its sell-off is muted compared to silver's disappointing breakout. Overnight, silver futures spiked sharply above $34 an ounce, hitting their highest level since late October. But the rally proved to be short-lived as prices ended below $33 an ounce. March silver traded at $32.58 an ounce, however. The precious metal is down more than 4% from its Friday session highs. Meanwhile, gold is looking to eke out a small gain for the week, just barely notching a new all-time high. February gold futures last traded at $2,896.80 an ounce, up roughly $10 from last week. Philip Streibel, chief market strategist at Blue Line Futures, said that the sell-off in silver has dragged the entire sector down. He added that while it was exciting to see the metal push back above $34 an ounce because of its volatility, the move was too good to pass up for many investors. Silver has had a great run, and for many investors who bought when prices were below $30, this was a great way to end the week, he said. At the same time, Streibel said that easing geopolitical tensions are sapping gold's safe haven appeal. Before we show you more clips, smash the subscribe button and check out our huge discount on NordVPN, the fastest and most reliable VPN on the market. This VPN service is a perfect fit for smart stackers who want their privacy protected and don't want their data compromised by prying eyes. For less than the price of a cup of coffee, secure your internet access and get 3 free months with our promo. Believe me, the only problem you'll ever have is that you didn't get it 6 months ago. Let's get back into the episode.
What I see right now, I've never seen in 35 years. I am sitting on thousands of ounces, thousands of numismatic coins in stock, 10s and 20s, part of a large buyback I did. And as an example, people could trade gold eagles right now, straight up for 63 St. Gaudens at no cost, 1 for 1. When I tell you I've never seen anything remotely close to that in 35 years, never. Coins like this right here, you can see that. I don't know if it's too much of a glare, but the $20 gold piece, I've never seen it. Ever. And you've never really heard me talking about certified numismatic coins on this show or any. We've talked about circulated coins before, and because it's always been about value in a world that had gone mad and haywire. And it's not about collectability, it's about ounces of gold. But I will tell you, from a contrarian standpoint, from a standpoint of price anomaly of the past 3.5 decades, the best value I have ever seen in $20 gold pieces, $10 gold pieces, certified, even circulated AU, BU, XF, all the way up to uncirculated. It is the most undervalued, best opportunity, honest to God, I have ever seen in 35 years. And you can trade your Buffaloes and Eagles straight up for 62 libs, 63 cents, 64 cents. You may have to pay just a tiny bit. I've never seen it like this. Never. So when we go over the specials tonight, I don't know if we have them, but let me just say this for any people out there that want numismatics. You can call Liberty and Finance. If you're one of my clients, call me or my brokers. If you work with us, we're all one team. And understand that we probably have what you're looking for times 100. And I will tell you, if you're buying gold in my career, and I don't say this often, I have never seen a better value in gold ever. Never, never. There is zero opportunity cost, zero, in buying pre-33 gold right now. And if you buy it from a company like ours who will treat you right, you'll pay less per ounce primarily than you would for a 2025 gold eagle. Way less. And that's never happened by a country mile. So I wanted to say that because it's significant. And it's part and parcel with the idiocy of this American public who is just once again missing the ball completely and being misdirected into the wrong place. And the overhang. And one last piece that I want to address. Part of the reason that there's such a massive overhang in supply and low premiums, aside from the Trump euphoria and the Trump and a lot of, I get that, right? The culture part, I say that over and over again. It's justified, but they're missing out on the monetary side. And so you have all the people that are buying Bitcoin and Nvidia and the risk on trade and Apple. You also have some people selling to do that. A good number over the last few months did sell right after he was elected. But you also have the 2025 allocations that come out. And a company like mine has to spend $25-50 million buying all of the 1 ounce, half ounce, quarter ounce, 10th ounce, American Eagles, the Buffaloes, the Silver Eagles, the same thing for the Canadian Mint, the same thing for the Austrian Mint, the same thing for the Australian Mint, the same thing for UK and South Africa, and all of the rounds from the refiners. If you don't oblige and take the distributions each year at the beginning of the year, you fall into obscurity and you're not at the top of their list and you're not going to get product when everyone else is running out. And I always have, like during the pandemic. And I honor my word with these people, and we go deep into our lines of credit if we need to have current year issue. At the same time, for example, you can buy a gold eagle, which we had on special last week. I think it was on special at $75 over spot. The brand new gold eagle 2025, the distributors have to pay over 3% to get them from the mint. They're paying more from the mint than I'm selling you a 2023 or 4 Gold Eagle for. I've never seen this stuff. At the same time, there's this scramble for bars coming off of COMEX and the LBMA. Do you see a contrarian indicator here? Do you see misdirection here? Do you see what's happening? And if you don't, you'll never get it. This is as good of opportunity I have ever seen in 35 years, and I'm on record saying that.
What do you think about Andy Schectman's insights on the BRICS nations, the silver squeeze, and the potential explosion in gold and silver prices? Are we really on the verge of a massive shift in the global financial system? Let us know your thoughts and predictions in the comments below. Do you see silver and gold skyrocketing soon, or do you think the squeeze might ease up? Let's discuss it. Now check this video right here because it's a perfect fit for you, and I'll see you on the other side.